In our next example of bad broker behavior, we're going to talk briefly about something that we call steering business. This has to do with the fact that at times there are different commission levels paid by insurance companies. Typical commission for a workers' compensation policy is 10% of the premium. It goes down as premiums rise, but for most small to mid-sized companies, 10% is typical. For all other types of property and casualty insurance, property, general liability, automobile, etc., commission is typically 15% of the premium. Occasionally what will happen is an insurance company will offer additional compensation. They might bump up the commission from 15 to 17% to try to entice brokers to place more business there. It's designed specifically with that intent. And while it doesn't sound like a big jump in terms of 2% in terms of your premium and what you're paying, for the compensation for the broker it can be significant. So there are a couple of ways that clients can get in trouble here because of higher compensation coming from a particular insurance company. One is the obvious, that the broker doesn't even present options with insurance companies that pay standard commission when another insurance company is paying higher commission to that broker. But a more subtle way is when the broker brings in quotes and simply in his office, his or her office, the broker negotiates very hard with the insurance companies paying the higher commission rate. And so they make sure that when they come out to propose that they've driven down the premium of the insurance company that's paying the higher commission rate to become either the lowest quote or even with any other quote that's low, so that they can convince the client that, look, this insurance company really did a great job. The missed opportunity is that some of the other insurance companies that quoted haven't been pushed. They haven't been encouraged to drive pricing down. There haven't been arguments made to that underwriter to try to get the pricing down, because the goal of the broker was to obviously place business with the insurance company that paid the higher commission. And so there's a lost opportunity for the client because one of those other insurance companies might have lowered the premium even further. It's a tough thing for clients to really manage. Obviously, you can ask what commission percentage is being paid by each insurance company that's being presented as a quote, but what it doesn't tell you is necessarily what insurance companies that haven't quoted or that have declined, what commission percentages they were offering. So we always recommend that compensation discussions be had with brokers. We would say you should go beyond just the commission percentages and have an understanding of what's a fair compensation for the broker. It can be based around typical percentages of 15 and 10%, but year to year, if the broker is getting similar compensation with slight increases each year in terms of the dollars they're paid, that might give you and give the broker a better sense of stability so that the broker can bring in every quote.